Good morning, everybody. This is the live market open for October 8th. It's Thursday. I'm Yohay Elam of Forex Crunch and Market Movers and doing this show for FX Street. So we had some action in markets, some changes, of course. Let's see, first of all, what we had, what we'll cover today, the recent developments, charts and levels, and what we expect in the next 24 hours. You also expect your questions as usual. Okay. So in the past 24 hours, what we had yesterday during the show, we had UK industrial output rising, and we had that rising 1.9 year over year, and that gave a boost to the pound. Today we'll have more news for the British pound, and we'll cover that shortly. Okay, then we had Canadian building permits miss expectations. This was quite disappointment. And later we had crude oil inventories also rise too much. So we had two blows for the Canadian dollar, which lost its highs. Dollar can already fell under 130 and then retreated. We'll show the charts shortly. Now we had this morning a German trade balance missing, coming out at under 20 billion euros a month, and exports were the worst since 2009. So we had a fall also in exports and also in imports, and this shows that especially the demand from China is weaker. And all this comes before the Volkswagen scandal, which is set to hit, is already hitting the German economy, but we're still not seeing it in the numbers because this is a figure for August. So if you look here at the calendar, we have, as you see, the German trade balance coming out at under 20 billion, lower than last month. Exports fell by 5.2%. Imports by 3.1%. So it doesn't look too good. Also, the current account is lower. Basically, well, half the surplus we had last month. So August's numbers, it could be still a one-off, it could be seasonal, but we know that more trouble is coming ahead. So that was sort of a blow for the euro. So what happens in the euro? Well, actually, it took the other direction. It went up. Now, we talked about this several times here, that the euro is a safe haven currency. That means that if there's bad news, it's actually good for the euro because money is repatriated. And it sometimes doesn't matter if the bad news comes from Germany, comes from Europe itself. Okay, so we have euro dollar rising. Now it's at 112.87, but it has already reached 113.09. And let's show you another more interesting chart for euro dollar right here. And this is the triangle we've been talking about in recent days. Downtrend resistance that began back in August was formed in September, and now maybe we're seeing a breach. But I'm saying maybe because we often see some kind of false breaks in euro dollar. So this move higher, I would still wait for a confirmation, wait for it to really settle above 113, wait until we're sure that this breakout is real and not a false break, because we've seen such moves in the past as well. But finally, after a few quite frustrating days of very tight range trading, we're finally seeing euro dollar move higher. I see there's some kind of issue with the chat, so I hope you find this interesting, of course, and hopefully the chat will come back and we'll have time for your questions. In the meantime, let's take a look at other currencies. So we had pound dollar. Despite the bad figures yesterday, we had some kind of sell-off in the US dollar. Sorry, we had positive figures yesterday with the industrial production. We had pound dollar moving higher. We mentioned this, the current level at 153.25, and now we're waiting for further developments. 154 is the next line of resistance, followed by 154.50. On the downside, we have 152.50. So we had sort of the British pound cable finding a bottom a few days ago and maybe beginning to move a bit higher. And this still may be a correction and not a full move. But anyway, it's quite interesting. What we have today from the UK is a rate decision, which is, of course, very important. In the past, it used to be not so important because almost each time the Bank of England leaves interest rates unchanged. Just a second. And the meeting minutes, what members actually talked about, this was released only 2 weeks afterwards. In the past few meetings, they changed their way that they do business, and now they release everything at one place. The most important thing to watch is how many members voted for a rate hike and how many did not. So we had last time 8 members, including Governor Mark Carney, the George Clooney of central banking, voting against the rate hike, voting to leave policy unchanged. Okay, this is 8. It has been so. We had in the past sometimes 7 members voting, only 7 voting for a rate hike, and usually we had a consensus of 9 members voting against the rate hike. We had 1 member that did vote for moving the rates higher. That was Ian McCafferty. He did that in the past 2 meetings, as we can see here. This is the FX Street calendar on Forex Crunch. And the big question is, will this kind of vote pattern change this time? Assuming we have no change, which is, I think, the consensus, as we see here, then we have basically the pound wobbling around, moving in the same place, and not changing any direction. Okay, but if we have 7 members, only 7 voting for no change and 2 voting for rate hike, then we could see the pound move higher, because that would be more hawkish. And the reasons for seeing more members voting for rate hike is that wages have strengthened in the UK in recent months, but and that's a reason that shows that inflation is on the move. Inflation is rising, and that wage inflation will eventually trigger real inflation, and then we have reason to move rates higher, and that's why 2 members can vote for a hike. But we know that the Fed is more important. The Bank of England waits for the Fed, so I think this chance is we have a very low chance. What we could see is that all 9 members, including Ian McCafferty, decide to vote for no change. In this case, it will show that in the Bank of England, they're worried about the Chinese economy, and they're worried about what's going on in the UK economy as well, because we've seen earlier this week that the services PMI figure dropped to 53 points. I think it was the lowest in 2 years, and that's of course worrying. That's a reason to wait even for the hawks. So I think there's the consensus scenario is no change. 8-1, 8 against the move, 1 for a move. But if we have, there is the second option is that we have 9 members all voting against the rate hike, and in this case, it'll be, of course, a negative for the pound. It could hit this kind of recovery. Let's go back to the chart. We could see cable move back down. These are the levels to watch on the downside: 152.80, 152, 152.50. So after this this recent recovery, we have quite a lot of room to fall on the downside. Okay, it's the big event of the first big event of the day. Let's look at what's expecting us in addition, things I've highlighted out for you. So at 11 GMT, that's noon in London, we have the Bank of England's rate decision. Just half an hour later, we have meeting minutes from the European Central Bank. Okay, this is also relatively new at the European Central Bank. The ECB didn't release meeting minutes, but now it's doing it a bit in delay. Yeah, it's well, a month has passed since the meeting. The meeting was held in early September, and now we have the minutes. So what are we expecting? Well, usually they make it sort of a toned down version of what happened there. We don't know who said what. We don't know if the Germans were more hawkish. Of course, that's expected. And if which members were more dovish. Basically, what we had back in September was a dovish press conference. Okay, we had Mario Draghi signaling that the ECB might extend QE or maybe expand it. Not so soon. They still need to see more figures, but they did revise inflation forecasts quite sharply. So they acknowledged the fact that China is slowing down, that inflation will be lower, and that they're ready to act. What does it mean? How ready are they to act? And if they really discussed it in a serious manner in September, that could hurt the euro. Okay, so he said that bad news in general is good news for the euro because the euro is a safe haven currency. But if the European Central Bank intends to print more money, then of course it's bad news for the euro. Yeah, so I have news that the chat is still, we have still trouble with the chat. So hopefully it'll come back later and we can have your questions. And I'm checking it every few minutes, but so far we don't have anything. We can hope it'll be back tomorrow. In any case, we had excellent questions yesterday from all the participants, and we're looking, hopefully we'll have the chat feature come back. Anyway, going back to the European Central Bank, we had, so we'll see how close they were to making more QE, to extending the QE program or expanding it. Currently, the European Central Bank buys 60 billion euros every month, and this program that began in March is expected to end in September 2016. They will probably not reveal too much, and in October, no change is expected, but we do expect them to act in December. They might hint about something in October and say something in December, probably only extended beyond 2016, probably towards 2017 or infinity, but not buy more bonds immediately. Okay, so that's where we stand at the moment. Let's go back to more events that we have today, to the key events. Of course, you can look at detailed events and expectations on the calendar, but let's look at the key events. On 12:30 GMT, we have the weekly US jobless claims. That's, we expect, well, more of the same. We had 277 last week. This time we're expecting 274. This has been quite stable, and it continues showing steady expansion in the US labor market, which of course is good news, but since we didn't have wild swings, it has less of an impact. I believe that if we'll see in this figure right here, maybe under 260,000, it'll be of course dollar positive. If we see above 280, it'll be negative. You can see all in all the trend is good. Well, less jobless claims, less people in unemployment during the past few years. The trend is clearly down, and that's good news. But in recent weeks, it has been quite steady. So maybe it'll be different. 260 to 280 is the range I'm looking for. Above or below that could have an impact. And at 6 GMT, for those of you in the London session and the New York session after London closes, sorry, we have the Fed meeting minutes. Okay, let's see. The Fed met back in September 17th. What we had at the time was a decision not to raise the rates and a dovish press conference from Janet Yellen. They were worried about the strength of the dollar. They were worried about the international developments, aka China. And now what we're expecting is that the minutes could reveal a bit more about what's going on in the US economy, about how worried they are about international developments, and how they see a rate hike in 2015. That's of course the key issue. So the dot plot showed that 13 out of 17 members, including the voters and non-voters, saw one rate hike in 2015. We're probably expecting that in December because there's no press conference in October. It's October 28th, the next Fed meeting, and the one afterwards is on December 16th. Now, we're going to see how many people really supported this view, how strong their views were. It's important to remember that since then we had the non-farm payrolls. These non-farm payrolls were very disappointing, only 142,000 jobs gained, downwards revisions of 59,000 jobs, wages got stuck 0% and on month over month and 2.2 year over year. So we might think, okay, these figures are not exactly correct because maybe the Fed was more anxious, more desperate to normalize, to move the rates higher in September. But since then we had this terrible figure, so maybe it isn't that relevant. On the other hand, it's important to remember that the protocols, these meeting minutes are revised until the last moment, until today, until yesterday. So we might have them tweaked to reflect recent developments. Okay, other things to watch out for in the Fed meeting minutes is that, well, how many, in September, we did have a debate if we did talk about the Fed maybe raising rates in September and maybe not. Towards the event, we got a few hints that they weren't ready to raise rates, but still, we want to know how many members did support it. We know that one voting member, Jeffrey Lacker, wanted a rate hike, and we want to know how many also considered such a move and were convinced to wait. How many were on the edge? How many were close? Okay, again, since then we had the bad NFP, but this is still relevant. Okay, another thing to look at, of course, the big headlines from that meeting were that they were worried about the US dollar, worried about China. So yet again, how worried were they? Was it really terrible or not? Is the situation, in their opinion, terrible or not? And we'll get a look in that. And of course, the Fed's two mandates. So employment, already mentioned. Since then, we had the bad NFP. And then, of course, but at least given the data that they had in September and mid-September, what do they think about employment? Is it really moving steadily towards full employment, or there's still a bit of slack or a lot of slack? That's also a key thing to look at. And of course, inflation. Last thing, their second mandate, they were a bit less confident. They were waiting to be more confident about inflation to raise rates. So we didn't have fresh inflation numbers since then, nothing earth-shattering. But so this will be maybe the most relevant part of the Fed minutes, because this will be not so stale like their view on employment or their view about rate hikes, which is, of course, related to employment. So that's sort of a long preview of what we expect. It's at 6 GMT. I think it's important to remember that when the Fed releases either a decision or the minutes, we have an impact, an immediate impact, first of all, and then another move in the Tokyo session and move tomorrow morning. So by tomorrow's session, we hope, first of all, that the chat will be back online, but we also hope that we will have a full digest of the Fed meeting minutes right here. At the same time, we have a speech by Mark Carney of the Bank of England. I don't think it'll be that important because we have the rate decision much earlier today. And then we have at 7:30 GMT, we have John Williams of the San Francisco Fed speak once again. I think it's his third time this week. So it'll be interesting to hear if he continues supporting a rate hike. Currently, he says he does in 2015, but we haven't heard from him so much. I mean, we haven't heard anything new, and not much data has been added, so I don't think it's that important. Let's just look at tomorrow's figures. Well, until tomorrow's session, we have only Japanese new home loans, and it's not that critical. The Bank of Japan is looking more for GDP figures and other important ones. And tomorrow we do have an interesting event. That's the Canadian job figures, but we'll talk about that in detail, of course, tomorrow. Now let's take a look at the charts. We talked about the euro, we talked about the pound. Let's move on to dollar yen. Yes, still around 120. We saw a sell-off of the US dollar in the past hour or so. So we had the pair fall to 119.60, but that's well within the range. So nothing earth-shattering. Yesterday we had it rise to 120.50 and come back to around 120. 120 remains a key level. Let's look at the daily chart. As you can see, very steady, very flat, very range trading. I find this kind of range trading I find a bit frustrating, but for those of you looking to make sort of just a few pips. I think it's interesting to watch. Let's move to the Canadian dollar. We had quite a few developments. We'll have the jobs figures tomorrow, and we had yesterday we had dollar CAD dip below 130. That was a big move because the pair fell below the post-Fed lows. Let's put it right here. So I thought we would have maybe a double bottom at 130.12, but then we had it fall all the way to 129.90. But that was a false break. We had a turnaround. Why did we have a turnaround in the Canadian dollar? First of all, building permits fell by over 3% in Canada. That was some negative news for the Canadian dollar. Canadian dollar is a normal currency, not a safe haven one. That means bad news is bad news, good news is good news. Very simple, very straightforward. We had then later on the release of crude oil. Let's see if we can, I don't remember the exact numbers. We have them, no, we don't have them here. But I think it was about a rise of 3 million barrels in crude oil inventories in the United States. And of course, more oil, a glut of oil is bad for Canada, which exports oil. So we had a very nice rally in oil prices. We had a WTI almost reached 50. We had Brent at around 52, 53. And then we had dollar CAD falling back. Oil prices falling back down, and the Canadian dollar with it back to current levels, 130.44. We had it even higher yesterday, earlier today, even at 130.70. So this is specific. The Canadian dollar was specifically hit by oil prices, but it's not the only one that sort of retreated from the highs. Yesterday we were talking about the rush to commodities, the commodity currencies, how all commodities went higher. Now we're seeing a reversal of this trend. Okay, so if we move to Aussie dollar, one of my favorites, we had it hesitate a bit under 72 and then break higher, and it reached 72.30. Okay, but then it turned back. It's also influenced by the price of copper, which crossed the 5,200 line and then went back to the 5,100 handle, and the Australian dollar fell under 72. So we had some take profits on the Australian dollar as well, also related to the data that we had regarding copper. Another thing about Australia is that China is back to town. Chinese enjoyed the Golden Week holiday, but it's over now. The stock exchange in Shanghai opened once again. It did do some catch up with other stock markets. That means it went up, but now it's going to react to fresh Chinese news, and they're not necessarily that good. For example, even if you look to Europe, the German trade balance reflects weak Chinese demand in August. So we'll have more data from China in the next few days, and we'll see if this supports the Australian dollar or hits it. It's important to remember for Australia, Australia depends a lot on China. Okay, but of course, all the world depends on China. New Zealand dollar also here, the same pattern. We had a very nice rally. We had a jump in the price of milk, of dairy products, almost 10%, 9.9%. And then this sort of supported the Kiwi dollar on its way up. We had a peak of around 66.50. I find 66 as support. Let's put a line over there so you can see it more easily. Yeah, it's a weak support, as we're still seeing a battle of Kiwi dollar around this level. Okay, let's move on to other currency pairs. Unfortunately, the chat is not working. Anyway, I hope I can hold your questions for tomorrow, and we'll try to answer as much as possible. Dollar Swiss is at under 97, still a relatively narrow range. So we have some weakness in the US dollar. I think we can see here some kind of pattern that it rises, gets stuck, and then falls. And I'll examine it a bit more in detail later on. Anyway, the bigger levels here to watch are 96.60 when we're close to this level, and 98.40. Okay. Euro Swiss much more stable, back to the drawing board, back to 109.40. The wide range is 108.60 to 110, and now we're bang in the middle. Remember, the Swiss National Bank is intervening, and Switzerland has, of course, a lot of trade with the Eurozone. It's basically surrounded by Eurozone countries, and movements are slow, except, of course, for what we've seen in January. Just let's put a small reminder. We had this peg of Euro Swiss to 120. This is a weekly chart, and then boom, almost 15% fall, stabilization, a move higher, and now we're stuck in a narrow range once again. Let's move on to Euro Pound. We had a fall from the highs. We reached 74.40, something like that. We had it fall under 74. Now it's rising a bit once again because the euro is on the move. And we're awaiting the rate decision in the UK. So levels to watch on the downside are 73 and the upside 74. It's a bit more straightforward. We have more round numbers. Euro yen is moving a bit higher, but still within range. 135.30, 135.60 is resistance, support at 134, followed by 133.15. This is a pair across of safe haven currencies, but the yen is a much more well-established safe haven, and the euro is relatively new to the game. Let's move on to one of your favorites, pound yen. Well, the pound has been on the rise. The yen is stuck. So we're seeing this uptrend continue. In the Gepi and the Dragon, 184.35 is the next line of resistance, and towards the next line there is not much left. It's 186, the round number. On the downside we have 183 and 182.50. Lots of pips in this currency pair. Let's just take a small peek at the price of gold. Above this C1, 1142 is a very nice separator of ranges. Above we have 1156, followed by 1170, and on the downside we have 1100. I don't follow gold too much, but I know that many of you are interested in that, so that's sort of a small brief on that. Maybe that's enough currency pairs for now, or no? Let's. So you don't have your questions. Maybe we'll talk a bit more about other currency pairs. Euro CAD, Canadian dollar. The euro began moving up, and Canadian dollar was set back. So after we had this fall because of the strengthening of the Canadian dollar, and while the euro was stuck, now we have Euro CAD moving back up. That means the euro is strengthening and the Canadian dollar is weakening. Let's look at the Australian dollar against the New Zealand dollar. The antipodian cross, it's falling. New Zealand, that means the New Zealand dollar is doing better than the Australian dollar. We've seen it follow below 110, and now it's around support. Let's look at the bigger chart. We had the pair moving higher because for quite some time, and then we had a range. I think maybe now it's ready to break lower. What do you think? Anyway, further support is at the round number of 10. No, it's let's draw a line here. 108 would be the next level, and further real support is right here. Don't know how many of you are trading this cross. Commodity currencies do trade in tandem, do trade together, but they're never born equal. New Zealand exports more milk. Australia, iron and copper. Iron and copper are more sensitive to the Chinese slowdown. Milk is more stable because it's food, basically. It's not only milk, it's of course other dairy products. And okay, I think we had enough currency pairs for this brief. Unfortunately, the chat is still down, so hold your questions for tomorrow. I'm sorry. That's the bigger scheme of things in euro dollar. Let's put on this chart. We're still seeing this kind of breakout out of range. out of the downtrend resistance line, out of the wedge, but we're still waiting confirmation. Okay, this is the daily chart of euro dollar. I would like to see it hold above these levels for another day to confirm the breakout on a technical basis, and we would have to have very dovish news from the Fed in the Fed minutes, and before we really know where it's going. And we also have the ECB meeting minutes today. Okay, let's take a look at the bigger themes moving markets. We've touched on some of them, but not all. These are the events for this week. Let's maybe do a quick review. We had Australia's rate decision on Tuesday. They decided not to change the rates. That was not surprising, but they also didn't really change their language. That's one of the things that enabled the Australian dollar to rise. Another reason is that copper is higher, and the third reason is that we didn't have news from China because China was closed. We had Draghi talking also on Tuesday. Me and quite a few other analysts expected some action, but he only talked about art, and that sort of kept euro in line. Yesterday we heard from the Bank of Japan not making a change, but still leaving the door open for action at the end of October when they'll have their semi-annual outlook. Okay, we're still seeing dollar yen, of course, stuck in a narrow range. So that was yesterday. Today, well, we talked about this. We have three big events. I should have put this, but basically two: Bank of England rate decision, the ECB meeting minutes, and most importantly, the meeting minutes from the Fed, still the most important central bank. And tomorrow we have Canadian job figures. Here are the bigger themes in the market. We have the big question: to hike or not to hike? The Federal Reserve. Nothing is expected in October because there's no press conference and data has been, of course, weak, the NFP. But December, I think, is still on the cards. The markets, by the way, are pricing it. Bond markets are pricing a rate hike at only they're pricing a no hike at 65%. Let me try to show you the expectations. I think I've shown you this in previous shows, but here we have 20 days till the next Fed meeting. For October, let's see, 95% chance of no change. That's a clear cut. December, only 61% against the cut. So it's not priced in. If we do have a cut, it'll be surprising for bond markets. It'll be surprising in general and could be a big boost from the dollar. But that's only December 16th, and that's over 2 months in the future. So anything can happen till then. Let's just look a bit forward. In January 2016, no press conference. Still, most bond markets reflect no hike. And only in March, only in 5 months' time, bond markets are pricing in a rate hike. Okay? So that's a big theme in the markets. I'm following this chart from the CME group. Let's continue. ECB, European Central Bank, we'll see how close they are to extending or expanding QE. There's a good chance that they'll announce in December that they're moving it beyond September 2016. That's, of course, easier to do because just talking about extending it is easier than announcing that they'll buy bonds at a higher rate immediately. Now they buy 60 billion a month, and they may raise it to 80 billion, 70 billion, 100 billion, who knows? But that's, of course, a harder decision to make. Of course, we'll hear from the meeting minutes. And, of course, what's going on in China. We'll have a Chinese GDP later this month, maybe in 2 weeks' time, if I'm not mistaken. We'll know a bit more. That's, of course, an official figure, and many take Chinese data with a grain of salt. They don't believe the official figures, especially as it's a huge country of over 1 billion people, and they released their GDP figures just 2 weeks or 3 weeks into the new quarter. So anyway, these figures will be followed. Trade balance figures. Markets are trying to assess what what's going on in China, how hard is the landing, if it's a soft landing or hard landing, okay? And Bank of Japan's October decision looks closer. We might see some action from the Bank of Japan. The meeting is on October 30th, and by then they'll have their fresh assessments, fresh GDP, that will hopefully move dollar-yen out of range. And of course, Greece, it's been off the radar for quite some time, but talks have resumed this week. We had a Eurogroup meeting, we have IMF meetings, and the most recent news is that Greek Prime Minister Alexis Tsipras said that he wants the review to end by the end of November. So after the first review, the topic, the hot issue, the big elephant in the room, the topic of some kind of debt relief for Greece will be on the table. So of course, Germany doesn't want any kind of debt relief, especially not an outright haircut, because that will cause pain for the German taxpayer. But on the other hand, they want the IMF to be in, the International Monetary Fund, and that doesn't go hand in hand. The IMF wants some kind of debt relief for Greece, so something has to give. Either the IMF will succumb and accept Germany's no haircut demand, or either Greece, or either Germany will accept some kind of haircut, or either they'll continue without the IMF. So these are the three options. It's always in the back burner, and it will likely explode later on. It's just a story I'm following. Next week here in Barcelona, we'll have the ex-finance minister of Greece, Yanis Varoufakis. He'll be coming here for a visit. He'll be talking. I'll try to be there in the audience and hopefully ask a question. But I know that he's a very, very popular guy at the moment, so I'm not sure I'll make it. So Greece is always in the back burner. Yeah, let's look again at the charts. I think usually at half past the hour we have a release from the UK. Today we don't have anything. It's a bit more, well, action comes in the UK, of course, at the rate decision at 11 GMT. Okay. So let's see if there is more tension in markets towards that decision by the Bank of England. Here we are. No, still the same levels, which are relatively high levels. 153.30 above the 153 handle. 154 is the next line of resistance that I'd see for the pair. But all in all, if we look back just a bit, the pound had a few terrible days in August. Look at this fall. 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days of falls in August. Then we had it recover to around 156, and then again 1, 2, 3, 4. Okay, 4, then a pause, then again 1, 2, 3, 4 days. So it fell then again in 8 out of 9 days. Now it's beginning to recover. It's the third day in a row. Let's see what we'll hear from the Bank of England. If we have 8 members voting for not changing policy, it'll be more of the same. If we have 9, we could have a change of course for the pound. We could have it fall back down. If we have 7 members, which is very unlikely, only 7 voting for no change and 2 members voting for a hike, we could see it extend its rally. My bet, it's closer to the dovish side, closer to either no change, 8 against the hike, 1 for a hike, Ian McCafferty, or a unanimous decision of 9 against 1. Of 9 against null. Nobody for leaving the rates unchanged. We'll know that in exactly 2 hours and 30 minutes, under 2 hours, and 2 hours and 20 minutes. Okay. This is euro dollar, more of the same. Let's see if we have a bit more. Unfortunately, I apologize again. Chat system just doesn't work, so we can't accept your questions today. Please accumulate them for tomorrow. Hopefully tomorrow it'll be resolved and we can answer more of your questions. Tomorrow, of course, we'll talk about the Fed's meeting minutes, digest it in depth. also the rate decision by the Bank of England, and we'll talk about Canadian job figures a bit more for the CAD. No, unfortunately, no chat. Okay. So I guess it's time for the wrap for today. So this is the live market open wrap for October 8th. I'm Yohay Elam of Forex Crunch and Market Movers, doing the show for FX Street. So recent developments in markets were that we had good figures from the UK. Industrial output was on the rise. This helped the pound recover. We have right here the British pound in the third day of recovery. That's good news. Apart from that, we had Canadian building permits disappoint. Oil inventories went up, so we had the Canadian dollar cooling down. We had it yesterday falling, dollar CAD under 130, and now today it's back on the rise. Big event is tomorrow, the jobs figures from Canada. Okay, and then we had in the Eurozone a miss in German trade balance. Exports the worst since 2009. But as we've talked in the past, many times bad news are good news. And finally, we see euro dollar as a safe haven currency enjoy the fresh worries and rise. Or more nicely here, we see it sort of move above the range. I wouldn't call it a breakout just yet. We're still awaiting a confirmation, but maybe finally we're seeing some kind of movement out of the range. So that'll be interesting to watch. Today we have quite a few interesting events. We have the rate decision in the UK at 11 GMT, expecting 8 members to continue voting for no change and 1 for a hike. We might see it go to 9.0, and that would be dovish. That would be bearish for the pound. Half an hour later, we have the ECB meeting minutes. We'll see how close the ECB, how seriously they were discussing more QE, how close they were, how worried they are about their inflation forecast. Jobless claims in the United States at 12:30. More of the same. I think 260, 280 will mean no significant moves, but we can have it. We can have always surprises. And the big event for the day is the Fed meeting minutes. A few things to watch there. How close they were to indeed raising rates. How worried are they about China? How worried are they about inflation? And another thing is jobs, of course, because we know now that jobs were terrible in September. So this will be also interesting to watch, of how upbeat they were on the jobs figures and how they expected things to evolve. And of course, the last but not least, regarding a rate hike in 2015, not only how close they were in September, but how eager they are to do it in December. Of course, it's never clear language. This is revised a few times, edited, redacted, so we might see things a bit confusing. We have a first reaction immediately when it's released, of course, but then another reaction in Tokyo, and a third reaction in the European session. We'll be here tomorrow morning to digest everything. Further events, BOE Governor Mark Carney talks, and the Fed's Williams also talks, but these are less important events. On the charts, apart from euro that we talked about, pound we talked about, dollar yen continues hugging the 120 level. Commodity currencies, not only CAD, are moving in the other direction. It means that yesterday we had a rally in commodity currencies. Now we have them cooling down. Dollar CAD above 130, Aussie dollar under 72, and the Kiwi struggling with 66 once again. So all in all, we have change of what we've seen. The mood isn't so good anymore. We're seeing the euro strengthen and commodity currencies weaken. And today we have a very busy day, and I expect a lot of action. Sorry again that we didn't have the chat available for you today, and we couldn't accept your questions. Hopefully it'll be back tomorrow, and we'll be glad to answer all the questions like we did in previous sessions. So that's it for today. Thank you everybody for watching. We'll have a recording of this on the site and in FX Street, and also wrap up later on today. So thank you and see you tomorrow. Bye-bye.